All right, guys, we are back today. Let me know how the volume is. Sound should be good. Eddie, never, bro. Never, dude. My dogs are way cuter, bro. Honestly, we can let the chat figure it out, dude. To be honest, man, we can let the chat talk about it. Oof, bro. Oh, man, my stomach, dude, is messing with me, man. All right, team. Yeah, so the SPY is actually starting to come back a little bit. Mostly a sideways choppy day, but it's starting to rebound some. Market looks choppy, but we got the Fed minutes report coming out in about 25 minutes or so. And so with that, yeah, it's going to be a little bit slow leading into that because people are just scared, basically, is what's going down. So Fed minutes report today. We got a few good articles here. It's set to be released at 2 p.m. Eastern. It could clarify whether they think the Fed is going to make another 75 basis point rate hike at the September 20 to 21 meeting. And what, the rationale for that is essentially what's going to cause them to ultimately do that. Let me know what the music sounds like here. We're going to read the full report live as we get it. I got a few options. I could send you guys the report and let you guys read it, or we can just read through the entire thing right here on the stream and then watch the stock market reaction to it. It's going to go live at exactly 2 p.m. Eastern Standard Time, and so we're going to cover it as soon as it drops. But yeah, let me know. We're going to do a Twitter poll as we do here. All right, so it's time. FOMC Minutes report dropping soon. Calls or puts, let me know. Again, you might hear some noise. We're redoing the floors here at my home. And so we're getting wood floors put in upstairs where we had carpeting. So you might hear some loud banging, some tools per se, and you'll be okay. You'll live from that. But yeah. Thank you for all the follows on Twitter. We got a ton of new follows on Twitter. We certainly appreciate the love and support. We're also going to do a Twitter poll, and we're also going to do a poll here, essentially saying the same thing, to be completely real. But yeah, let me know what you guys think. Get this going here. Hey, BBBY, guys. I mean, listen, it's mostly a sideways day. I wouldn't get super upset about Bed Bath & Beyond if you're watching it. I mean, I don't know. Of course, I have no idea what BBBY is ultimately going to do. AMC actually took a bigger drop, but I wouldn't be too upset regarding Bed Bath & Beyond. It's mostly a sideways day. There hasn't been any crazy negative reaction to this or anything, so I wouldn't fear it too much, to be honest. But we'll see what we get, of course. Okay. So I have circulation problems for all my doctors here. I've got blood in the toilet, you know what I mean, in my stool. And I take daily aspirin for circulation problems. Could that be why? I'm trying to make sure I don't have something major. I need to go to the doctor. The hypochondriac in me is panicking over here. But the show must go on. But for all my, medical knowledgeable people, am I dying right now? Oh, FOMC meeting is at 2 p.m. It comes out in about 23 minutes, guys. 23 minutes. A little bit too much information, I understand. But I guess I'm trying to make sure I'm not dying over here while I'm doing this meeting. So, like, y'all will be okay. But, like, real life stuff, dude. I mean, I don't know what to do. I'm getting old, bro. I take aspirin. I got circulation problems. It's realistically probably because I sit here with you degenerates for hours and hours every day without moving. My wife wants me to just get off the aspirin, which is what I'm kind of thinking about doing, but I have circulation problems, so it's like, I don't know what to do in this regard, man. I don't know what to do. Yeah. Can y'all hear that? I mean, we got people doing our floors upstairs. If it's red, yeah. So it's not actual meeting. So again, just to put this in perspective, sorry, again, I'm gonna preface everything else I'm about to say with my apologies if it's too much information. To be honest, I use the chat as kind of like a resource because we got a large array of different types of career paths and people and medical professionals, to be honest, in the stream. And so I can just kind of ask everybody kind of like a doctor, you know, but yeah. Turmeric. I take turmeric, you know. Yeah, I work out every day, or at least 3 to 4 times a week. Not every day, but, you know. Yeah, for sure, Maniac, 100%, dude. All right, anyways, back to the stock market stuff. Again, my apologies for TMI here, but honestly, I'm nervous about it. Anyways, so every 6 weeks, the Fed does what's called the rate hike decision that they do, the Fed meeting for the rate hike decision. It's every 6 weeks. It's the meeting in which they determine whether they want to raise or lower interest rates, and they announce that to the public. That's the Fed meeting that happens every 6 weeks. It's called the FOMC meeting. And then weeks after that, they drop a PDF file that goes live at exactly 2 p.m. Eastern Standard Time that lets people know their rationale and logic behind raising or lowering rates in the previous Fed meeting, FOMC meeting. And so that's what's dropping today. Both of them are highly influential, but the Fed Minutes report is just explaining, it's like a multi-page document explaining why they chose to make that decision in terms of raising or lowering interest rates. Okay, so it's gonna, and it'll also give some foresight and maybe some foreshadowing into what they decide to do during the next Fed meeting. Is this really loud? Do I need to mute it for a second? But yeah, it's gonna give them some rationale and to why they chose to make that decision. Is essentially what it is. All right, so that drops in about 20 minutes. And so again, let me know what you guys think. Bullish or bearish? We're going to do a poll here. We also did a Twitter poll regarding this for the Fed meeting. I messed up the poll, guys. I messed up the poll. We got to redo it. I messed up the poll. Let me fix this. We're going to delete this poll, and then we're going to redo this poll. I forgot to actually do the poll here for the Fed Minutes report. And then we're going to make it a 2-hour poll. There we go. Calls or puts, guys. Calls or puts. Vote on this poll. We got the poll live right now on Twitter. All good, Kaj. Yeah, all good, dude. There is the link right there. Vote on the Twitter poll if you can, if you haven't already. We certainly appreciate you all. But yeah, the Fed Minutes report is certainly influential over the stock market. It certainly has a lot of people watching it. A lot of people are anticipating and trying to figure out what we're going to do. Hit that subscribe button, guys. Hit the notification bell. I certainly appreciate all the support here. But yeah, let me know if you're bullish or bearish on this Fed report. Hey, thank you, Jungle. Yeah, listen, that's what we do here. Beginner, you know, beginner medical. Hey, you know, bullish or bearish on the Fed Minutes. Vote on the poll, bull or bear. I see a lot of doctor, bro. My wife wants me to go get seen, you know. And so it's like, ugh. Yeah, so the FOMC Minutes report is released as a PDF file on the Fed website at exactly 2 p.m. So it's already written, it's already out, and they're just going to release it to the public at 2 p.m. Eastern Standard Time. So in 18 minutes is essentially when it's going to drop, and it will certainly impact the market. It will certainly cause some type of movement. Is it going to be as much as the FOMC meeting or like CPI or any of that data? Probably not, but it's still very relevant, highly covered, and influential over the stock market. Bro, can y'all hear this? I might have to go outside, dude. I can go outside and just chill by my pool and cover this Fed minutes report, to be honest. It might actually be kind of nice. It's going to be hot, but I could go outside. I got a laptop. I could just hop on the laptop and go outside and chill. Yeah, let me know. We'll see what Bitcoin does. We'll see what it all does. Fed minutes drops in about 17 minutes, guys. 17 minutes. How loud is this banging, though? Because really, it's right above me. You know, it's like right above me. I can hear it. It's like, doom, doom. Hopefully, it blends in with the music. Maybe I should turn the music up so people just think it's like I got some like really hard bass in here. You know what I mean? We'll see. Again, guys, FOMC meeting is coming out at 2 p.m. Eastern Standard Time. I could basically read the whole thing here if you guys want me to. FOMC drops in about 17 minutes at exactly 2 p.m. Oh, that's exactly what it is, Matthew. That's exactly what it is, bro. I mean, listen, you read my mind, dude. I mean, listen, it's definitely not people putting in wood floors right above me. It's definitely not that. It's just sound effects. It's intentional. Okay, so we got a lot of people asking, how do you find this report? I'm going to drop the link to where you can find it. It's at federalreserve.gov, FOMC calendar. And so basically, if you want to find it yourself, this is what you do. Okay, after 2 p.m. in 15 minutes, once the report is live, you refresh this page and you scroll to the very bottom to July 26th through 27th, which is what the FOMC meeting that the minutes report is covering is from. And then to the very right of that on the right side, to the very right of that on the right side of the page, you're going to see the Fed minutes PDF option to click on it and find it. And it's going to be on the very right side of the July 26th to 27th, which is where, which is the Fed meeting that the Fed minutes report is covering. Yeah, I'll read the full report to you guys if you guys want me to. And I'll read it fast too, you know. Honestly, for a stock that's gone up so much, Brian, boring is good today, to be honest. I'd rather it be boring than just crash down, you know? I'd rather it be boring than crash, you know, for Bed Bath & Beyond, for Bobby over there. Yeah, I mean, I can put the whole report on the screen. Again, this is a multi-page. I'll give you an example. Here's the last Fed minutes report, okay? We'll show you the last one. HTML or PDF. We're just going to go to HTML. This is the last one, okay? So this is the last Fed minutes report. And it's long, bro. It's long. It might take me a solid, 20 minutes to read this thing. Developments in financial and open market operations, all the way down. Self-review of the economic situation. Staff review of the financial situation. The staff economic outlook. It'd probably be better for you guys to read this yourself. I mean, I could read it on the screen, but what I'm more so going to be worried about, regardless of what they say in the individual report, is that I'm going to be focused on the stock market reaction to it, because what happens here is that you're going to have a lot of algorithms that pick up the data, try to interpret it, and then take position sizing with the stock market and the SPY, the Q, and the broader stock market as a whole. And so we're going to get a big reaction as soon as the report drops, and so I'm going to watch to see what the algorithms do here. That's the more interesting things for short-term traders, but it's also very relevant for long-term. You just kind of got to read it. It might take a while. We just need the gist of it. Well, honestly, it might take me a while just to get that, to be honest. Again, that thing is like, again, if you want the actual document here, look, this is the website you get it on, okay? Here's the website you get it on. But again, I mean, when we look at this here, the thing to understand. This is 12 full pages, so it's going to take me a while to interpret that. Again, we're going to show you where to find it so you can read it yourself. And then we're going to watch the stock market reaction to it. Yeah, very quickly. Very quickly. I don't know about 5% a minute. Probably not. It's not going to react as heavily as to the CPI because the CPI is immediate interpretable data, as opposed to this, which is just a big report. So we're not going to, the reaction's not going to be as big as that for like CPI or like especially not the FOMC meeting. But we're going to get some quick reactions. Algorithms are going to play off of it regardless. You know what I mean? So it's still important to understand and watch. And we'll read the basic paragraphs in terms of like the most important aspects of it quickly. All right, I'm going to give you guys kind of an explanation of this. I'm kind of researching. Hey, thank you, Paz. We appreciate that, dude. Thank you, sir. FOMC Minutes is released in 11 minutes at 2 p.m. Eastern Standard Time. And again, we're going to drop it as soon as it comes out and show you where to find it. We're also going to watch the stock market reaction to it. We can even read it. I'm a very fast reader. And so if you guys want me to just kind of rip through it, I could read incredibly fast. Definitely top 3 readers in the world right now. I could read it incredibly fast if you guys really want me to, but I don't know how much use that's going to be. I would rather just watch the stock market reaction to it. Again, I took a position on Intel today. We'll see if that works out. All right, so here is a quote from Reuters. And again, this is a quote from Reuters. It says, quote, Fed officials for much of this year have been reshaping monetary policy at an unusually fast clip to get ahead of the worst inflation outbreak since the early 1980s. And the minutes have reflected that increasing sense of urgency. The readout for July meeting is likely to do the same and emphasize the depth of the Fed's determination to get inflation on a sustainable downtrending path. The Fed has lifted its benchmark overnight interest rate by 225 points this year to a target range of 2.25 to 2.5%, end quote. From Reuters. Again, that was from Reuters. Now, again, with that, we're going to get some foresight into what they're ultimately going to do for the next Fed meeting, how much they might potentially raise rates. And yeah, we'll see. Yo, what's up, Mo? How you doing, bro? Hope you're doing good, dude. Bro, I don't have a home, dude. This is my home, bro. Y'all are looking at it. Oh, we're not going to, I mean, listen, I'm just going to watch the stock market reaction. I'll read it if you guys want me to, but we're going to read it off and on. I'm not going to read 12 pages. It's just going to take a while. Crypto, let's see what crypto does. Hopefully, do you guys think this will impact crypto? I guess is the real question here. Bitcoin is essentially break even right now as well. I'm not short. I'm definitely not short. Yeah, 75 basis points is probably priced in already, to be completely honest. The report is released at 2 p.m. here. I'm going to put this on the screen since we get it asked a lot. There you go. Yes, it will affect crypto. Yeah, I mean, a lot of the stock market. I mean, crypto has just been following the broader stock market lately anyway, so it doesn't really matter too much. Hey, y'all hit that subscribe button if you haven't already. Hit the notification bell. I certainly appreciate the support. Crypto are down to the Fed and ECB. Yeah. I could do a poll, but I think we already got our poll going on right now. I just want to see if people are bullish or bearish on the Fed meeting we're covering right now. I could do a Twitter poll, or maybe a poll on Discord. It's been way underperforming stocks. The merge is certainly going to affect a lot of different things, Justin, in my opinion, mostly because it's going to affect mining companies as a whole. Of course, miners don't want the merge to happen because it means that they're no longer going to be able to mine Ethereum. But I think the common logic is that it's going to happen, and it might not. Regardless of whether it happens or not, it's still going to affect crypto in a heavy way, especially ETH, obviously. 7 minutes. Yeah, all good, Andre. No worries. FOMC Minutes report drops in 7 minutes. Pun intended, I guess. We'll see what we get. Why are so many bullish on FOMC Minutes? I mean, people are just naturally bullish. It's human nature. Anytime I do a poll, and I do polls a lot, to be honest. Every time I do a poll, everybody's always bullish. Bulls reign supreme unless it's something that people like overarchingly hate, like Dogecoin or Shiba Inu, I guess is probably a better example. People actually like Doge. Six minutes, guys. 6 minutes. If you haven't already, take this the time to hit the subscribe button. We do this live for free every day right here on YouTube. Could you explain to beginners what will happen in 7 minutes? So I already did, but I'll do it again. It's all good, bro. No worries. So basically every 6 weeks, the Fed meets to do what's called the Fed FOMC meeting, whatever you want to call it. And they basically announce their decision on how much they're raising or lowering interest rates. The reason they do that is because if inflation is high, the logic behind raising or lowering interest rates is that if they raise rates enough, it will discourage spending enough for businesses to lower their pricing in order to remain competitive and thus lower inflation. And so every 6 weeks, we raise or lower interest rates to determine based off of basically how bad inflation is. In the latest few, we've raised them each one by 75 basis points, which is a very aggressive raise in order to combat inflation. And we have seen prices drop. So every 6 weeks, we do that rate hike decision on raising rates. And then weeks after that, we drop a PDF file called the Fed Minutes Report that details the justification for raising or lowering rates, basically why they chose to make that rate hike decision. And that is what the Fed Minutes Report actually is. It happens every 6 weeks. The last FOMC meeting was the 26th to 27th of July, and that's what this report is ultimately going to be covering. And so it's just an influence over the stock market. A lot of people react to it. It's a 12-page document that people are going to watch, essentially, is what it is. I mean, it could. I don't know whether you want to consider it fake news or not. I think that it's something that the market interprets. Mostly what happens is they drop this Fed report and algorithms react to it incredibly fast. So you'll see some big influxes of volatility and volume. I'm assuming what the algorithms do is they just try to look at words and judge whether it's bullish or bearish just based off of some of the words through AI and then react to it with buys or sells. But people react to it as well. I might trade it. We'll see. It depends on what happens. I got you. I'll give you that link right here, SM fan, on the page where you can find it. Yeah. Again, it's a 12-page report. Here's the last one as an example. It's 12 pages. I'm not going to be able to interpret this incredibly fast. And so you guys, it's better to just watch the stock market reaction and then use some type of news source to figure out what the interpretation of it is. News platforms like Benzinga, TD Ameritrade and all that are going to drop some cliff notes of it incredibly fast. And that's what we're going to cover here. And I'll tell you guys kind of what those cliff notes are. And if you want to find the actual Fed minutes report, I'll post it here so you guys can see it anyway. So this is the page where you find it. Scroll all the way to the bottom and look at the July 26 and 27 FOMC meeting, and then look to the right, and that's where the Fed minutes report PDF file is going to be. You can either use HTML, which is just web-based, or you can look at an actual PDF file of the report. Doesn't matter which one you look at, but yeah, that's kind of what's going down. 2 minutes, guys. 2 minutes. Again, bull or bear, guys, bull or bear. So far, we got about 600 votes. About 58% are bullish, 42% are bearish. We got about 800 people here. Music overpowering my voice. Well, I got people doing wood floors right above me, and so they're banging around up there. So I was hoping the music would drown out some of the beats, and people would just think it's, bass boosted or something. But I guess I'm failing at that. Algorithm getting confused. Hey, market's dropping down a little bit. The SPY is at 427. So the Fed minutes report's coming out in about a minute and a half, maybe a minute or so. So again, let me know what you guys think. We're going to cover it as soon as it drops. I'll send you guys the link to where you can find it. I'll look at the report myself. And then mostly what we're going to look at is the stock market reaction, as well as the cliff notes that other news sources give us, because that's the most reasonable way to interpret it, in my opinion. Look what the stock market does. We got less than a minute, as well as kind of analyze what Benzinga or TD Ameritrade or whomever are going to say regarding kind of cliff notes. Well, they react pretty fast. You'd be surprised at what these algorithms do, to be honest. All right, guys. Again, remember, put this page up, refresh it right at 2 p.m. in 30 seconds or however long that is, 10 seconds, and you'll find the report. And again, we're going to cover it. I'll put it on screen once I get it. But again, what we're really watching is the stock market reaction to it. It's not a meeting. It's a PDF file that drops right now, to be exact. All right, so there is so yeah, the poll page is frozen. There we go. So they just updated it. Here it is. It's live already. Or no, it's not live yet. Let me see. All right, so there's 2 p.m. Not out yet. They haven't updated it. Give me 1 second. And so again, we're just kind of refreshing this page. Still haven't done it yet, so waiting for the Fed minutes to drop. Refresh. Stock market is just pumped up from it. I told you the algorithms react incredibly quickly. Yeah, algos have already reacted to it. So the SPY is up to 427s. Again, I'm waiting for it to update. They haven't updated it yet. There it is. Okay, so it's here. All right, so let's go ahead and read this thing. This is it right here. I'm going to put it up. Here's the SPY going down, essentially. All right, so you can see here, developments in financial markets. The deputy manager turned first to a discussion over financial market development. Financial markets over the intermeeting period reflected elevated uncertainty above the outlook. Most market participants appear to view a moderation of inflation and slower but still positive economic growth ahead of the most likely scenario. However, investors appear to be increasingly attentive to downside risks to the economy in light of the potential for shocks from abroad and continued upside surprises to inflation. We keep reading here. I'm going to wait for the cliff notes. Again, market is kind of neutral reaction to it. If you want to find it, there's the link right there. But here's the report. So a staff review of economic situation. It says the info available at the time of July 26 and 27 suggested that U.S. real gross domestic product had declined over the first half of the year. However, the labor market continued to be very tight and labor demand remained strong. Consumer price inflation, as measured by the 12-month percentage change in the price index for personal consumption expenditures, remained elevated in May, and available information suggested that inflation was still elevated in June. So it's already live right now. Again, if you want the report, it's right here. It's a 12-page document, so I'm not really going to be able to do much for you. Here's the link if you want to find it. Go to that page. Go look down to July 26th and 27th, and then look for the minutes report on the right side of it. But yeah, we're looking at it now. But yeah, I mean, again, there's a lot of data. Hey, all good, Cincinnati. Thank you so much, man. I appreciate it. Again, I'm mostly waiting for the clip notes, but the stock market has reacted positively to it. You can see 427s for 427.50s here. We'll see what Benzinga says about the report. Usually they'll give us some cliff notes. Yeah, so from the Fed minutes, again, this is from Reuters. Again, Reuters reporting it very quickly. And we'll put some of these details in the chat. It says, from the Fed minutes, participants agreed there was little evidence inflation pressures were subsiding and that it would take considerable time for the situation to be resolved. Again, this is from Reuters. Stock market's ramping up, though. I mean, the SPY is at 427.90, almost 428 right now. And so, again, we're dropping this. Thank you, Emmanuel. Many Fed officials saw the hazard the Fed could tighten more than necessary. Some officials say appropriate to maintain restrictive policy for some time. So, again, we're dropping some of the cliff notes here from this. They said basically it would likely become appropriate at some point to slow the pace of policy rate increases while assessing the effect of cumulative policy adjustments on economic activity and inflation. And this is kind of what I expected here, guys. Remember, I told you guys that, like, I've seen prices drop on my end already. Like, gas prices are down incredibly big percentages over the last couple of weeks to months. And so with that, it's plausible to assume that we're going to have lower since we have lower prices, that the Fed is not going to be as aggressive moving forward in the next rate hike decisions, essentially, is what this is saying. Now, again, nobody knows what the Fed is ultimately going to do in the next Fed meeting, but that's kind of the logic here behind all of this, is that I've seen prices go down in my area, and sometimes that's the best gauge of inflation as a whole, especially when inflation, a large percentage of that is just fuel pricing, and gas in my area is like $3 a gallon, which is noticeably lower than it had been. And so it's logical to assume that inflation pressure is getting better. And with that, the Fed is going to be less aggressive in raising rates in order to, discourage it, if that makes sense. Bed Bath & Beyond just popped all the way over VWAP and came right back down here. I'm still looking at some of these kind of updates. So, again, we're going to drop some more from the Fed minutes report. According to the Dow Jones, here is another quote from the Dow Jones. And, again, we're going to cover all this here. From Fed minutes, officials underscore the importance of data-dependent approach to rate increases. Some officials say appropriate to maintain restrictive policy, quote, for some time. And that is from, let me see where this is from. From the Fed minutes. They also said, similarly, the unemployment rate was projected to start rising in the second half of 22 and to reach the staff's estimates of its natural rate at the end of next year. So you can kind of see everything that's going on there. The market's reacting mostly positively to this. You can see the SPY has popped all the way up to 427, starting to correct a little bit as people get a little bit more and digest more of this report here. So you can see the SPY down to 427.20s. Q is dropping down as well. And I think Bitcoin and other cryptocurrencies are mostly going to do what the SPY and everything else is doing. Bed Bath & Beyond is dipping all the way down to the $25 level, So, yeah, we're continuing to digest this report. Give me a second. But yeah, you can kind of see a breakdown of everything we said here. Again, officials underscore the importance of data-dependent approach to rate increases. Some officials say appropriate to maintain restrictive policy, quote, for some time, and that officials are underscoring the importance of data-dependent approach. Also, we had a little bit more data here. I can show you some more. So from the FOMC meeting, they said, quote, it likely would become appropriate at some point to slow the pace of policy rate increases while assessing the effect of cumulative policy adjustments on economic activity and inflation. And so I think that's causing a lot of bullish sentiment short term. At least that was what initially sparked this, 3 or 4 green candle run on 1 minute candles, is that they say they're going to be less aggressive in raising rates, potentially, not 100%, of course, but potentially going to be less aggressive in raising rates. And so again, we have this quote here from the FOMC meeting, or FOMC minutes report. But yeah, so far we're mostly neutral reaction to it, but we did get a quick spike, and we are actually green from when the report came out. Hopefully easing inflation fears, hopefully with lower pricing, it's going to mean they're going to be less aggressive. Again, there's a balancing act when it comes to rate hikes. If they raise rates too much, it's going to cause a lot of short-term pain, fear, and just damage short term. If they raise rates too much, if they raise rates too small, then people are still going to fear, and people are still going to worry about inflation long term. And so there's a balancing act here. And again, I think now that we're showing lower prices all around, especially with fuel, then I think that the Fed will probably be less aggressive in terms of their rate hike decisions. Not 100% though. You never know what the Fed's going to do, to be honest. But market is reacting mostly positively, slightly green from this, up to 427.20s on the SPY. The Q is currently at 328.90s or 329. We're not really dumping hard. We're mostly neutral reaction to this so far. Again, the FOMC port dropped at 2 p.m. right here, and the opening candle was at 426.69, and so neutral. We're slightly green from the report coming out. We're starting to bump up too. Market's starting to pump back up at 427.80s. So yeah, not a bad. Again, as I said, like most people are interpreting the cliff notes from like major platforms like Reuters or Benzinga or TD Ameritrade, and that's kind of what's happening here. And the market's reacting positively. Tech is pushing back up. Q is pushing back up as well. Bed Bath Beyond is holding at 25s also. Well, I mean, we're going to watch the short-term reaction value crypto. So, of course, we're watching the 1-minute chart. I mean, that's what people are going to want to see. Looking at a 5-minute chart, while it might show you the broader long-term trend, that's not what we're focusing on now. We're focusing on short-term reactions. So, of course, we're going to have the 1-minute chart up. If I could have a 30-minute or a 30-second chart, I might put that up, to be honest. Anyways, now that the Fed minutes report is out, bullish or bearish on it? Let me know. 61% are bullish. Yeah, market's not dumping. Market's actually pretty green from this report so far. It's up to 428.20s, 428.30s. Oh, got you. Yeah, no worries value. Was there any Apple news? I think most large caps are going to be reacting to this report, to be honest. So I doubt anything major is going to be happening in large caps. Apple looking at September 7th for the iPhone 14 launch event. And so I think Apple is probably pumping up because people are going to start front loading ahead of that launch if they're bullish on it. And that's exactly what we're getting. Yeah, Apple's ripping up with it. It mostly looks like the SPY, but yeah, that's kind of something that people do. They front load before that announcement. I might buy some Apple shares. We'll see. But yeah, so, market's green from the Fed minutes report. Any ideas about oil? What is the effect for gold? I'm not really a gold watcher here, to be completely honest. It looks like gold's reacting positively to this. I mean, gold a lot of the time does the inverse to the stock market, but it hasn't really lately. And it seems to be reacting positively to this as well. So the correlation there, I'm not sure. Somebody in chat might be able to help you out a little bit better. The Fed minutes report is right here. How come the market always pumps after the Fed minutes? It doesn't always, but I think people are naturally bullish. I think it's human nature. Now you got some bears in here. Listen, I run a community where we get thousands of different people every day. And so, of course, we see some bears and we see some bulls. But I think that this report is particularly bullish, at least so far, because it means that they might be less aggressive in raising rates, right? And while being less aggressive in raising rates, that's going to help everybody short term. And so naturally we're pushing up from it. People are more optimistic. People are less apprehensive to, invest because they're not fearing such an aggressive rate hike in the next FOMC. And so, that's kind of what's going on. Yeah, you're probably right. I should have added neutral. Yeah, so the Fed minutes report is right here. If you guys want it. There's the report right there in chat. Also, y'all hit the subscribe button if you haven't already. We do this live every day right here. And so, again, we trade a 30,000, 120,000 buying power account live at the open every single weekday morning. We don't sell or charge for a course or content at all. Everything we do here is free. We're just a resource and community for traders. And so if you appreciate stuff like that, hit the subscribe button. We cover all the major catalysts in the stock market. And, like I said, we don't charge a penny for any course or content. All of our content is free. So hit that sub button. I don't even claim to be an expert or a guru or anything like that. I don't want that type of pressure. I'd rather just give away free content to traders. And so, yeah, SPY is pulling back a little bit. We do have a double top now. Right here at about 428.50 or so. And so I think that's going to be a level to watch. We got 427.50 underneath this $0.50 level that might be influential. And we'll see. Hey, what's up, Joe? Yeah, man. Hope you're doing good, brother. What's the report? Again, every 6 weeks, the Fed meets to raise or lower rates. And then weeks after that, they drop the Fed Minutes PDF file, which just gives you foresight into what the next FOMC meeting might be, an explanation on why they made the decisions they initially did in the FOMC meeting. So this is a 12-page document, mostly bullish comments that I'm seeing in the notes. And if you want to read the full report, again, you can right here. I'm pretty bullish on the ETH merge. I think it's good. Stock market bouncing back up a little bit. There's the SPY back up to 428s or so. So the market's ripping back up too. All right, guys. So today we're going to have Governor Michelle Bowman speak on COVID and the role of women in the U.S. economy at 2:20. But yeah, just to put this into perspective, for the FOMC meeting, they dropped the rate hike decision at 2, and then at 2:30, usually Jerome Powell speaks and explains what they're doing. This isn't really like that. This is the Fed Minutes. It's just a PDF file, so it's not really like that. Just to kind of give you an explanation. If you want to read it, again, it's right here. I'm going to put this in the description. So if you guys want to find this link, I'm going to post it in the description so you guys can have it. All right, so it's in the description. You can check it out. If you want it, I'll post it one more time in the comments since we got so many people asking me for it. There's the link. Bitcoin, long or short? Well, it depends on what you think of the stock market. I think if you're bullish on the stock market, Bitcoin will pump up short term as well. If you're bearish on the stock market, I think Bitcoin's going to react mostly to these big fundamental data releases and follow it in sympathy. And that's exactly what we're getting. If you look at a Bitcoin chart relative to a SPY chart or something like that, it looks exactly the same right now. Mostly because the government owns billions of dollars in crypto and Bitcoin. So what's good for them is good for crypto, and what's good for crypto is good for them to a certain extent. A little ironic considering the entire purpose of cryptocurrency was to be an independent source, but who am I to judge? That's all good. I hope crypto goes up. I think Bitcoin and ETH are super interesting. All good, Eric. Thank you, brother. I appreciate the support. All right, guys, SPY testing highs of the day. We have a double top now, and we're testing that 428.50 double top. We just broke it. So the SPY just broke the high of the day today, guys, or the high of market hours, I should say. Not the high of pre-market, but the high of market hours. We're still pumping up. We're at 429s, 429 20s or so here. Bitcoin longer short trade. I don't really tell people what to do, so I mean, I'm not sure what you guys want to do in that regard, Yeah, I mean, that was the FOMC announcement last at the end of July. So it's mostly positive. Okay, so it's mostly positive. Again, just to give you some cliff notes into what essentially happened here with the Fed Minutes report. I'm just going to read them. I can post them in the chat as well, so just give me a second. But basically what they said from the Fed Minutes, they said all participants at the July 26 policy meeting agreed that 75 basis point interest rate hike was appropriate. So basically everybody was in agreement on that, and you can see that here. Also, following that, they said it would likely become appropriate at some point to slow the pace of policy rate increases. So basically lower rate hikes, which is good short term. Again, higher rate hikes, while it combats inflation better long term, causes more short term pain. And so now that prices are actually down, basically what they're saying is that it's appropriate to potentially start easing out of that aggressive rate hike decisions and lowering the rate hike decisions that they do potentially for next meeting. That is why the bullish reaction in the stock market is happening currently, is because everybody's basically seeing that maybe the Fed is going to be less aggressive in the next FOMC meeting. And again, I'm kind of posting this here in the chat. And again, as this said, it would likely become appropriate at some point to slow the pace of policy rate increases while assessing the effects of cumulative policy adjustments on economic activity and inflation, end quote, again, from the Fed Minutes report. So again, that's a good sign. It means they're probably going to be less aggressive, which is good short term. Inflation is getting better, and so they're going to be less aggressive in raising rates. They also agree that there was little evidence inflation pressures were subsiding and that it would take considerable time for situations to be resolved. Now, obviously, that's not a good thing, basically saying inflation obviously is still a problem. They said that they underscored the importance of data-dependent approach to rate increases, and some officials say that appropriate to maintain restrictive policy, quote, for some time. So basically, it ain't going to get that much better, but it's going to get better is essentially what I'm judging from this. Again, not 100%. You don't know the stock market. You never know the stock what the Fed or the market's going to do at all. You can only speculate and guess, but essentially what they're saying is that we've seen prices go down, and with those lower prices, we don't have to be as aggressive in raising rates. Essentially, we don't have to cause more bad short-term pain, because the whole reason to raise rates aggressively is to lower inflation. Because again, just to put this into perspective, if you don't understand what the Fed is talking about here, is that the Fed raises rates in order to discourage high pricing, right? By raising rates, people stop buying. And when people stop buying, in order to remain competitive, they have to thus drop their pricing, thus lowering inflation. With that, when they raise rates aggressively, it causes short-term pain, but it's better for inflation long-term. And it certainly helps quell some of the inflation fears that we get. But now that prices are down, they have to be less aggressive in ultimately raising rates. And in turn, we're going to have less short-term pain, which is causing the stock market to go up. At least that's my interpretation of it. That's what they are essentially saying in the Fed Minutes report. But that's kind of something we knew already. But again, it doesn't matter. Stock market's reacting positively, and that's a good thing. The news report is already out. It's right here. So if you want the FOMC report, just refresh, check the description. We got the report in the description. You can just go to the PDF immediately there. Well, yeah, there's going to always be a rate hike coming. They're not going to just not raise rates. It's not going to be as aggressively as the historical, rate increases over the last couple months, is what they're saying. Hopefully, is what they're saying. Again, that's how the market's interpreting it. I don't know if that's true or not. You don't know what the Fed's going to do. Inflation might get really bad, and in turn, they might just raise it by 100 basis points next time. Who knows? But what they're ultimately saying, and again, thought experiment. Take a step back, look around. Have you seen gas prices go down? If you have, then that means inflation is getting better, and in turn, the Fed will probably analyze that and potentially be less aggressive, which is good short-term for the stock market. It's good short-term for people, and the stock market is ultimately reacting positively to that. It's up to 428.60. Yeah, inflation is still ridiculously high, but again, as happens in earnings. All right, so the same thing happens in earnings, right? It's not about how much they increase. It's not about how much a company loses. A company can lose 100 million, and if they expected to lose 500 million, they're still going to fly from that. Same thing with rate hike increases. The Fed can raise rates incredibly high, but if they expected to raise them much, much higher, then the market's still going to at least react short term to the positive. Now, you never know. Market's interesting in that regard, where sometimes stocks can just do great in earnings and guidance and then tank, and sometimes stocks can do terrible in earnings and guidance and just rip up. Sometimes less common, but sometimes they can raise rates and the stock market still drops, or sometimes they can lower rates and the market still drops, and you just never really know. This is the best word salad I've ever eaten, bro. Listen to me. Top 3 borders in the world right now. Fed does not follow gasoline prices. I'm just saying inflation is based off of gasoline prices, or fuel prices more so. And again, these minutes are deliberately meant to be confusing. Well, everything kind of is, to be honest, in the stock market, bro. It's why a company drops earnings, and instead of just listing their EPS, sales, and guidance, they give you some puff piece on how amazing they're doing. They could lose 200 million, and still just have this huge puff piece in the beginning of their earnings report showing why they're just such a great company. They should just make a rule that you just got to give them the EPS, sales, revenue, and guidance, and that's it, and just let people react to what it really is. All right, guys. So here is also we do have the Fed meeting going on right now. I can go to it if you guys want to. It's the Arkansas Women's Commission monthly meeting in Russellville, Arkansas. You know, so I mean, I don't know if we're gonna cover that. I'm more so gonna watch the stock market and see what they do. We're also gonna be covering the Cisco earnings. I think we're gonna cover them today. Dude, these bots are hardcore. You know. Again, we can cover it if you guys want to cover it here. Let me pull it up. All right. Oh, wait. Whoa. Almost ended the stream on accident just now. Let me see. Hold on 1 second. Yeah, I mean, if you want the full report, I mean, here is the FOMC meeting from last, but market's starting to correct back down though. SPY is all the way down to 427.70s. There's no meeting. The FOMC, it's a Fed report that drops at 2 p.m. It's already out. Check the description if you want the actual report. But that's the report that everybody's reacting to. That's why the stock market's reacting to. If y'all are referencing let me look at the Fed calendar. All right, so today we have also we have Governor Bowman for the Arkansas Women's Commission monthly meeting in Russellville, Arkansas.
Session.
And here this is right here if you guys want to see it.
But most of the differences between how men and women fared in the labor market during that time had reversed by 2021. But their different experiences highlight how participation by men and women can sometimes be driven by different forces. The backdrop of recent events.
Can y'all hear this? You should be able to.
History, starting after World War II, of women gradually entering the labor market. Of course, women had always significantly contributed to and played a large role in the U.S. economy, but initially in ways that didn't show up in most government statistics. The rise of industrialization and the shift away from an agrarian economy provided opportunities for men to work outside the home. So women took on more responsibility, cooking, sewing, child rearing, and other domestic tasks. We heard an echo of that history during the pandemic. Because when schools closed and other childcare was disrupted, women assumed the majority of those caregiving responsibilities, which led many to quit their jobs and drop out of the labor force. This magnified the effect by eliminating jobs in childcare and resulting in even more unemployment. But that wasn't the only reason.
We'll see how this affects the market. It might.
During this episode. So let me start with the big picture on the differences between men and women in the labor market. Before 1950, few women worked outside the home, and the majority of those who did were not married. From 1950 to 1970, more women entered the workforce, but many didn't plan to work for a long period of time, and their investment in education and training was often limited. But by the mid-1970s, barriers that limited women's opportunities in workplaces began to fall. And by 1990, the education gap between men and women had narrowed significantly. Women's participation steadily.
Do you guys want to watch this or no? I mean, this isn't.
The gains leveled off in the 19.
Do you guys want to watch this or not? Okay, this is not really super relevant to what's going on. It might influence the market to a certain extent, but let me know if you guys want to watch this or not. This is basically Governor Michelle Bowman on C19 and the role of women in the U.S. economy. So it's a speech by Governor Michelle Bowman. Let me know if you guys want to watch it. It might impact markets. It might not.
Participation remained lower for women than men, regardless.
Yeah, I mean, it's gonna, listen, I'm not saying she's not saying some important stuff, but in terms of like stock market reaction, we're not gonna get too much from it. SPY is up to 428s. I'll give it, and for anybody that wants to watch it, I'll post this link so you can access it. Okay, so anybody that wants to watch it, here's the link. Again, there might be some good stuff, but just in terms of like me and stock market news, it's not really something I generally cover. I'm mostly just covering the Fed minutes. Um, Jerome Powell is going to speak in 3 minutes. Well, when he speaks, we can put it up. There's the link in chat if anybody wants it. It's right here. And I don't know if Jerome Powell is gonna speak, man. I don't think he is, bro. Again, I think you might be confusing the Fed minutes report with the actual FOMC meeting. Like with the FOMC meeting, they announced the rate hike decision at 2. And so they announced basically how much they're raising or lowering rates. And then 30 minutes later, Jerome Powell does a press conference for the FOMC. But this is just the Fed minutes report. And right now, I don't know if he's going to speak or not. I don't think he is, though, unless he speaks specifically in regards to what's going on over there with the governor. That's the only, way I would see him speaking. He's not going to speak on this. Fed minutes is already out. Again, I'm going to give one more explanation of this, guys. I'm also going to put it in sub-only mode. So, hey, y'all hit that subscribe button. We certainly appreciate it. We're trying to hit 83,000 subscribers, and we're actually pretty close. Again, all we do is free stock market content. We don't charge a sell, of course, or on anything. We don't, we give away all of our content for free. And so if you appreciate that, hit that sub button, guys. Hit the notification bell. I certainly appreciate you guys. Yeah, let's keep growing. Yeah, it's not a speech time for Powell. Again, what's going on? Again, every 6 weeks, they do the Fed rate hike decision. And then weeks after that, they drop the Fed minutes report, which is an explanation on why they chose to make the rate hike decision that they made. And it's a 12-page PDF file. Again, if you want the PDF file, look in the description of the stream and you should see it. It's on there's a link in the description if you want it. But again, just to give you the cliff notes again, since that's why everybody is here, the Fed basically said that everybody agreed on a 75 basis point interest rate hike. So everybody essentially agreed on that. And again, we'll drop these on the screen as well so you guys can see it. There is the link. But yeah, so hold on, let me get rid of this stuff. And again, I'll give you guys some more cliff notes on the Fed minutes report, what it said, why the market is reacting positively, all that good stuff. So just bear with me here. We're going to drop this pretty soon. So here you go. So all participants agreed at July meeting that 75 basis point interest rate hike was appropriate. So they all agreed on the rate hike. Following that, they also said here that it would likely become appropriate at some point to slow the pace of policy rate increases. So basically, eventually they're going to have to be less aggressive because prices are going down, while assessing the effects of cumulative policy adjustments on economic activity. So that was another quote from the Fed minutes report. The participants agreed that there was little evidence inflation pressures were subsiding or going away, and that it would take considerable time for a situation to be resolved. And so that's a less positive, less bullish quote from this Fed minutes report. So they're essentially saying we still have an inflation problem here, but they are seeing some prices go down, is essentially what they're saying. Following that, it says here, quote, that they are underscoring the importance of data-dependent approach to rate hike increases. And they say some officials say it's appropriate to maintain the restrictive policy, quote, for some time. And so again, another kind of bearish quote here, them potentially saying that we're going to still have to battle this type of inflationary pressure leading into, next year potentially is what they're saying. With that, they said similarly, the unemployment rate was projected to start rising in the second half of 22 and to reach the staff's estimates of its natural rate at the end of next year. Again, and this is all quoting from the Fed minutes report. But what I gathered from this is essentially that prices are going down some. And with that, we might see some drops in inflationary pressure. And maybe they can be less aggressive in raising rates, but that we still have, obviously we still have an inflation problem. And so we'll see what we get. You'll see what we get. Subscribe to yeah, I'm pretty neutral, man. I don't really have any huge bias with any specific, direction. I try not to be super emotional about any of my trading. I don't really need to be emotional. I think emotional kills profit, and I would rather just look at it neutrally and try to figure out where the money is flowing is all I want to figure out. I want to figure out where money is flowing, what traders are potentially doing, how traders are reacting to it, and what their biases are, because that can help me take positions. Apple flying up again. Another big news story today is that Apple Q is popping up as well. Market's starting to ramp up here. Q is popping up. What's your take on Michael Burry dumping his stocks except for his one position? I mean, let Michael do his thing. I like Michael Burry. I think he's a really smart guy. Love love the Big Short. Great movie. To be honest, here's a fun story. What initially got me involved with trading was I went to see The Big Short, completely oblivious to what a short actually was, with my wife back in like 2014 or 2016 or whenever it came out. That is the movie that sparked my interest in the stock market. I went to go see it. And I realized, like, I've always been like a poker player and like somebody that likes to use my head to kind of like, I like strategy stuff, right? And stock market's pure strategy. And so I watched that movie and was like, that looks like it would be interesting, And so I got home and I started learning about the stock market. Eventually, here I am. I run this community and it's amazing. And, I truly appreciate everybody here. But yeah, The Big Short, partly Michael Burry was what caused me to start this channel. So shout out to Michael Burry. I don't know if I agree with his decision. I think that we're seeing prices drop all around. And so with that, I think that we might see less inflationary pressure, but again, who knows, man, the market might just dump. I think we might be a little extended over the last couple of weeks in all honesty. But I'm cautiously optimistic. I hope the market goes up, I hope that we don't see any corrections and pressure, anyways, I'm going to put some music back on and we can just kind of hang out. Let me know if you can hear it. You should be able to. I thought the Wolf of Wall Street was good. I think the Wolf of Wall Street was good, but I think because of how good the movie was, even though the overarching point of the movie is that greed is bad, I think it might have motivated people to be even more greedy, to be honest, because that lifestyle looked fun as hell, And so I think it might have caused a lot more people to enter the stock market and to act like Jordan Belfort than which was ultimately intended. I think Leo has even said that people like Jordan Belfort are the worst people, but like what that movie ultimately did was create a bunch of, JB mimics, a bunch of Jordan Belfort clones out here, And so I think there's a lot of irony there, but like, hey, good movie. I'll watch it. Yeah. So Apple's pumping up. They announced that when they made the announcement of when their next iPhone was going to come out, essentially is what's going on here. So Apple is bumping up. The reason Apple is up is because they made the announcement of the debut of the iPhone 14 and when it's essentially going to come out. They said it's going to be the launch date for the iPhone 14 is going to be, man, where is it? I know they had it. September 7th, they're unveiling the iPhone 14. So it's expected to hit stores on the 16th. And so Apple leading up to that might be interesting. What do you think about S&P? Well, I'm bullish. I think the S&P might still be a little extended from the big drops we've had over the last couple of months. And really, everything was kind of started by, like, the reason the market tanked like that, aside from the Fed rate hike decisions and the inflationary data, was because of, like, Meta. Netflix had some really bad earnings reports. And with that, the whole market basically just collapsed a couple, months ago. And so I still think we're rebounding from that. But I'm bullish. I think I'm holding currently Intel as a position. So I bought Intel today, and it's going to be a swing trade. I think when I look at Intel's chart, I believe in Intel long-term, and I think it's still pretty oversold on the daily chart. And so I ended up buying Intel today. We're slightly green in that one. We'll see if it works. Of course, I'm not an investment professional. I'm not liable if you lose. I have no idea what the stock market will do. And yeah. Again, we do have the Arkansas Women's Commission monthly meeting in Russellville, Arkansas. And again, if you want to watch that, the market might react somewhat to this. We even have some notes from this. I'll cover the notes if you guys want to see it, though. But Bowman said that the labor market continues to be strong, says that the future of labor supply is uncertain. So here, that is going on right now. And if you want the actual link to that, here's the link right here. It's only got about 200 people watching it. So we actually have more people here than are watching the entire report right now. And so we've got like 5 times the amount of people that they have. But if you want to watch it, here it is right here. They're saying some good stuff. Again, I'm not against anything they're saying, props to them. Got to be a tough job, man. A lot of people hate on Jerome Powell, but I think that's a tough job as well, man. No matter what happens, people are going to be mad. If they raise rates too much, people are angry. Short term, if they raise rates too little, then people are going to say they're not doing enough. And so it's just a thankless job. So, we'll see. 50 to 75. I hope it's 50, man. Next FOMC meeting is mid-July or mid-September. All right, we also have Cisco earnings today. Cisco earnings. Hey guys, we need 85 subscribers to break 83,000 today. So if you could hit the subscribe button, listen, we still got 1,000 people plus here. I'm talking to you right there. We need 85 guys. 85. Hit that subscribe button. Again, you have no reason not to. Everything we drop is free. We don't sell anything. We don't charge for anything. We don't claim to be experts. We trade 120,000 in buying power at the open every day for free, live. We have no paywalls behind any of our content. It's all free. And so, hey, hit that subscribe button, guys. Do it now. Help us hit that 83,000 level. SPY at 429s. Nearly all respondents to the desk survey anticipated a 75 basis point increase in the target range. And most expected a 50 basis points increase in September to follow. Yeah, I hope it's 50. Hoping for a 75 increase. 50 is not enough to make consumers stop spending money. I don't know, bro. I think when you look at prices, man, like if you look at, okay, so generally what happens when inflation is high is you see lower luxury good prices. You see crashes in luxury goods. And that's exactly what we've seen. We've seen sneaker market crash. We've seen the Rolex market and the luxury watch market crash. And so we've seen a lot of luxury goods lose value. We've also seen increases in pricing in necessities, like home prices have been in a ridiculous bubble for the last 6 months. Car prices are freaking obscene. A 95 Toyota Tacoma right now is like 30,000 with 120,000 miles on. It's just ridiculous. And so with that, yeah, it's already been like that. Luxury goods have crashed. And eventually maybe they're down so much that I think the really smart people might start buying them up because I think we're going to get a resurgence eventually. And so if luxury goods are crashing, now might be the time to buy some of that stuff up. Again, I don't know, not saying 100%, but listen, better be fearful when others are greedy when others are fearful. I think Rockefeller said best time to buy is when blood is running in the streets. And I don't think that's the case for the stock market. Bed Bath & Beyond just ramped up, guys, up to 2730s right now, 2730s. And we are holding this. Again, we've been holding this and talking about it for the last 3 days on our live stream. We ended up buying it at $14, and it's currently up to 2780s right now. So we're up about 100%, a little bit less. Hey, thank you, Keaton. I appreciate you guys. Thank you very much, my man. Thank you, dude. Yahia, my bad if I mispronounced that, brother. I really appreciate it here for the first time, but I love your analysis, man. Thank you, sir. Ivan, my man, thank you. PI, thank you, brother. I can give you my full playlist if you guys want one. I've been streaming every day for years, and so I kind of have like a 600 track playlist. It's literally over a day long. And if you guys want it, I mean, we got a lot of songs here. I'll post it if you want it. Here you go. Hey, what's up, Doug? Yeah, hey, Bed Bath & Beyond, over 27s right now, guys. Over 27s. SPY rip it up too, man. My Intel trade's doing great so far as well. Also, guys, real quick, if you want to follow my swing trades, check out Alpha Insider. Okay, check out Alpha Insider. I am sponsored by them, so they are a sponsor of mine. But basically, it's a website where you can track your stuff. Okay, so just to put this into perspective, check out Alpha Insider here. Okay, and so if we look at Alpha Insider, let me find it. It's a way to track your swing trades here. And so again, we got into our latest one was Intel. Intel this morning, and we did update this here. I'm beginner trading YT if you want to track my swing trades. And it's basically a site. It's free. There's no paywalls behind it. There are some people that charge if you want to follow their picks and their call outs and stuff. Of course, I can't guarantee any of these are going to work, but it's just a way to track what other people are doing. I'm using it to track my swing trades. And again, really interesting, like ETH Moon here, 5 year, he's up 1,300 on the year. He's up about 40 on the month. He's up about 40 on the week. He's up about 2.86. And so you can kind of track all your stuff going on. Really useful, great idea in my opinion. And again, if we look at this here, you can kind of track my Intel trades, and we're going to add other swing trades as we do them here. But if you want to check them out, here's the link. Big market drop. We got a lot of people that work for the channel here. We got a lot of contractors, Pawn, Douglas, a lot of people that help make this community what it is. So, we're definitely a we. I'm not doing it myself, Hey, happy birthday, Dustin. Everybody give my man Dustin Lawson a happy birthday. Bed Bath & Beyond over 30 is a great B-Day present for you, sir. So I hope it works out, man. I really do. But yeah, good luck, guys. Can make the argument that Powell's job is unnecessary. He's just the spokesman. You know what I mean? Like, he's not the one making all the decisions. It's everybody. Everybody kind of gets together and makes that decision, which is what we want. We don't want one dude at the wheel just doing everything. We want input from, multiple people, and let kind of the common logic go through. That's what we want. We don't want one person. And again, Powell's just the head. He takes all the ish from it, if you will. But it's not just him. I mean, it's everybody making those decisions. Yeah, thank you, A1. Appreciate it, man. Morning from Samoa. Hey, what's up, Ivan? Thank you, man. How much do you trade with? I trade about 120K in buying power. We got about a $30,000 account is what I trade with. But again, I'm not claiming to be an expert or some super great guru or anything like that. Like, that's not really what I'm about. There's too much pressure. It causes you to be too predatory, in my opinion. So you got to like rent luxury cars and flex on social media just to try to sell courses. And like, that's just not what I do. I'd rather just give everything away for free, not claim to be an expert, and just create like a broad stock market community here where it's not really a day trading community or a swing trading or an investment. It's just kind of everything. We cover all the major earnings calls as well. And so, yeah. Yeah, we show our trades live. In the morning we do. Right now I'm not really trading this. I might buy this dip, but if I do, I'll let you guys know. I'm gonna buy this dip on the Q instead. There we go. There we go. All right. Let me fix this. Just to clarify, I mean, I don't show all my trades. I don't want that type of pressure. I'd rather just not claim to be anything. We're going to buy 25 shares here. The Q, we'll take 50. See if we get a pop, a bounce. You think tomorrow will be green or red? No idea about tomorrow, man. Nobody really does. I mean, we can speculate, but I have no idea. I think we might be due for a short-term pullback in the market just because of how much we've ripped up over the last, 6 weeks or so. I think we might be time for a pullback here. But we got 50 shares of the Q. We'll see what we get. Just a small position. I might add a little bit more. Use a risk level of about 25 here or so. All right, we're in 75 shares of the Q. We're not going to add any more to this. Yeah, 100%, Chris. It's a very difficult job, man. Just a hard job to do. Again, and it's not really Powell that's just making the decisions. Only Powell. Like, it's a large group of people making these decisions. All right, Bitcoin back up to 23.55. So the Fed minutes report, maybe I should just write this down so people can kind of see it. I understand the confusion, though. A lot of people are used to Fed meetings. And this is kind of what this is. We're watching the stock market reaction to the current Fed meeting. But what most people are watching here is called the Fed minutes report. Every 6 weeks, the Fed chooses whether they want to raise or lower rates, and they announce that decision to the public in the FOMC meeting where Jerome Powell does his conference and all that stuff. That's usually what people understand and know. And then weeks after that, they announce how much they're going to raise or lower rates. And then weeks after that, they do what's called the Fed minutes report, which is really a PDF file explaining the rationale behind the decisions that they made in the Fed meeting. Again, it's like clockwork every time, every 6 weeks Fed meeting. And then after that, weeks later, you get the Fed minutes report, which drops as a PDF file on the government website. We kind of, it's a 12-page PDF file that goes live at 2 p.m. It's already written, but it goes live at 2 p.m. today, and it already is live. It went live about 45 minutes ago. With that, it's going to be virtually impossible to analyze it and interpret it immediately. And so usually the best way to interpret these type of reports is to check like broad news sources like Reuters. We covered them here, and get the cliff notes from these reports. The algorithms will react instantaneously from it. But the better way to do it is just to, just see what the news sources are saying here. Yeah, we're going to use 330 as a risk. Maybe getting a little bit loose with this, but it's all good. We made so much money on BBBY, to be honest, it doesn't matter. Let's see if we get a pump up. The next FOMC meeting is going to be September 20th and 21st, I believe. I'm not 100% sure, but I think those are the dates for the next one. We're just going to cover this. Again, we're going to use 330 as a level, but we're not going to hold this forever. There's 30. So yeah, market's correcting a little bit. We lost like 30 bucks there, 40 bucks. It's all good. Again, we made a ton from BBBY. Now BBBY is back up. AMC started to rip back up as well. Let's see how Intel reacts here. I am swing trading Intel, and we are greening it nicely. Kind of tempted to add a little bit more to that swing trading position. I'm not really trying to be exact on how much I make or lose. I'll show you guys my trades as I get involved with them. But again, I'm not claiming to be expert or anything like that. And one thing that I've realized is that that's a lot of pressure. Like, pressure kills profit. And I'm not trying to just, I'm not trying to just have so much pressure on me to succeed that I fail. And so we made money on Bed Bath & Beyond. We're holding it. We're holding AMC right now as well. And again, like I said, I'm not claiming to be an expert or anything like that. I don't want that. I don't want that smoke, if you will, will be the close of market on the 24th. Kirkland. Kirkland is Costco's company, right? Hey, what's up, Andrew? I do want to say thank you, guys. We are 4 subscribers away from hitting 83,000 subscribers. 4 subscribers away. So thank you so much, guys. Truly do appreciate the love and support that we've gotten here on this channel. And yeah, we're going to hit 83,000 subscribers today. So thank you so much, guys. I just put it in now because I know just me saying this is going to make at least 3 people subscribe. So thank you so much, guys. I truly do appreciate it. You guys are the realists. Couldn't have this community without you guys. And again, thank you so much. We appreciate it. And thank you, Chef. Yeah, we broke it. So thank you, guys, man. That's crazy. 83,000 subscribers, guys. Feels like we just broke 82, to be honest, like a week ago. And we did, man. We did. We've grown pretty fast here, guys. I appreciate the love for sure. Kind of tempted to buy Apple and just turn it into a swing trade if it doesn't work out as a day trade. We'll see. All right, guys. So let's see what the market does here. I think 330 is still an interesting level. See if we bounce up a little bit. Apple is going to debut their iPhone early September, so early next month. Sorry, we're redoing our floors upstairs. Hey, my man. Thank you, MC. I appreciate you becoming a member, sir. Thank you, brother. Can you zoom in on the queue? Yeah, I got you, man. Yeah, this is just the heartbeat sound effect for, the stock market right now. It's definitely not people doing my floors upstairs. It's definitely not that. Yeah, we're in Apple small. I mean, we bought the dip. I might add a little bit more to it. 50 shares. Maybe add a little bit down to here and then swing trade it. Depends on what the Q in the market does, though, to be honest. All right, guys. Yeah, we're at Apple right now. 50 shares. Small. We might swing it. Apple literally exact same pattern as the SPY. Yeah, for sure. Well, I think Apple is influencing the SPY a little bit. They announced the iPhone 14 debut date, which is going to be early September. And so with that, you got a lot of people hyped up about it. Can I see how much I hate that you're calling it a dip? You're buying at the top of an overextended stock. Well, yeah, but you're looking at it long term, and I'm day trading it. All right, guys. Beautiful stream today, man, and I truly do appreciate you all. Sorry if it's loud. How bad? Can y'all hear that? Like noticeably loud? But yeah, I'm mostly a scalper young, so like I'm just kind of buying this. The only reason I'm adding to it, number one, is this is the dip I'm referring to. You know, and so and we're mostly break even from it, and so I doubt I'm even gonna hold this one very long. Retail sales came out this morning, Chris, and there were mixed results. Core retail sales came in better than expected. Core retail sales came in better than expected. Let me see what it was, man. I know we had retail sales numbers this morning. So retail sales came in at 0% versus 0.1, so worse than expected on core. On basic retail sales. Core retail sales came in at 0.4 versus minus 0.1. So core came in better than expected. Basic retail sales came in worse than expected. Yeah, and if this takes too long, we're just going to cut it. I mean, they're mostly break even right now. Also, we got a few people asking me about the Fed meeting. There is no Fed. There's no meeting for the Fed minutes. There is a meeting going on right now that we cover the reaction to, but there isn't an FOMC press conference today, I guess is what I'm trying to say. Basically, this is just the Fed minutes PDF file that was released to the public, and so market is reacting pretty positively from that, and that's essentially what's going on here. I'm only thinking like that because I have Apple puts. Hey, good luck, sir. Hey, nice, man. What's up, Mahedi from Bangladesh? Hey, man, welcome, dude. Happy to see you here, man. Hope you're doing good, brother. Noticeably loud? Who cares? Yeah, hey, all good. All right, so we're green in Apple. Again, we're just kind of sitting here. It depends on what the market does. Bed Bath & Beyond is back over VWAP, over 25 and over 26, and so that's good all the way around. We're also holding Intel as a swing trade. Yeah. All right, guys. So sorry if it's loud. My apologies. Again, it's definitely not. Yeah, bro, I'm trying to help my circulation over here, man. Market's starting to correct a little bit, though, back down here, guys. So the market's starting to drop. What are some of your goals in like 1 to 5 years? Hit 1 million subscribers, I guess, is one of them. Hit 100K this year is what I'm trying to do. If we continue at this rate, we will as well. I want that plaque, you know. But make $1 million from stock trading and investing is definitely one of them over the next 5. I don't know if I will. Still got a long, long way to go, to be honest. But hey, that's one of them. They didn't say goals have to be easy. All right. Yeah, man, I was talking earlier. The reason I have to take aspirin is because of circulation problems, man. Probably for me sitting here all day, every day for multiple hours a day. I was going to do Cisco earnings. I don't know if I'm going to. Do you guys think I should? I don't know what kind of volume we're going to get show up for it. You know, so I don't know what kind of volume we're going to get. Yeah, it's the July report. But the July report, yeah, it's the first link is the Fed minutes report. No, I go to the gym 3 to 4 times a month, or sorry, 3 to 4 times a week, every week basically. If I don't go to the gym 1 week, I feel like I missed out on some stuff. Time for me to get a haircut, bro. I gotta go get a haircut, man. But no, I do cardio. I knew I was gonna get. I knew everybody was gonna mess with me about that month one. I mean, I'm not in bad shape, bro. You know, I'm like 5'11". I'm probably like 165 right now. So I'm like my numbers are good. Like I'm on par with what I should be, I guess. I could probably deal with a little bit more cardio. I don't do a ton of cardio. It's mostly weights, but you know. We get some cardio done. Are you bullish or bearish as we speak? Depends on the time frame. I think short term we might see a correction. I think we're up a lot over the last 6 weeks, and so with that we might see some short term drops. But long term I'm bullish. I think we might be a little long term extended and oversold on the downside. So we'll see. It depends on what stock it is too. The broader market I tend to be bullish. But a lot of that is optimism. I'm cautiously optimistic and, you know, hope we do well, but who knows if we will. It's not CPI data. Hey, bonjour. What's up, man? Yeah, I'm actually from Louisiana, so we got a lot of French over there. I'm mostly French. Yeah, 100%. I kind of feel you on that, Andrew. That's kind of how I feel too. I think we're maybe a little extended short term, but long term I'm bullish. But short term, I think we might just be up a little bit too much relative to what's actually going on. Hey, y'all be sure to join our Discord as well. Completely free Discord. Again, we don't charge for anything. We got a lot of great traders there talking about stocks, talking about trades they're getting involved with, all that cool stuff. And so join our Discord. Here's the link. Hey, what's up from Sweden? Nice, man. Welcome, sir. Appreciate the love. International love here, man. Truly appreciate it, guys. Thank you. Bullish or bearish today? Oof. I mean, I'm pretty neutral right now. I don't think there's much going on. The report is already out, NYT. And so, again, this is the Fed Minutes report, okay? And again, to put it into perspective, the Fed Minutes report is a simple PDF file that's released and goes live on the government website at 2 p.m. Eastern Standard Time. You can find it in the description if you want it, but it's just a PDF file. There's no big press conference for it. You're thinking of the actual FOMC meeting. So every 6 weeks they do the rate hike decision meeting, which is the FOMC meeting on whether they're going to raise or lower rates. And then that drops at 2 p.m. for the FOMC meeting. Like the interest rate decision drops at 2. And then at 2:30, JP and the rest of the gang do the press conference at 2:30. And so that's probably what you're thinking of. This is actually different than that. This is the Fed Minutes report. So this is just a PDF file that goes live at 2 p.m. With what the Fed Minutes is just an explanation report on why they chose to make the decisions that they did and a little bit of foresight and potential foreshadowing into the next rate hike decision, which at this point is going to be mid-September, I believe. So that's kind of what's going on. And again, if you want to see the Fed Minutes report, all that good stuff, check the description. If you want to see kind of some notes on what happened, again, all participants in the July meeting basically agreed that 75 basis point rate hike was appropriate. They also said it would become appropriate at some point to slow the pace of policy rate increases while assessing the effects of cumulative policy adjustments on economic activity. They also agreed that there was little evidence inflationary pressures were subsiding and that would take considerable time for the situation to be resolved. They underscored the importance of data-dependent approach to rate increases, and some officials said that appropriate to maintain restrictive policy, quote, for some time. They said similarly, the employment rate was projected to start rising in the second half of 22 and to reach the estimates of its natural rate at the end of the next year. And so those are kind of the cliff notes from the Fed Minutes report, dropped at 2 p.m. Already out. Hey, thank you, NYT. I appreciate you, bro. I'm trying over here. Definitely top 3 best looking traders in the world right now. You know. What's up, Walter? Yeah, all good, man. Right, exactly. The report's mostly neutral. They said some good things, some bad things, all that stuff. All right, so our Apple trade's turning out well. You know, you love to see this. I'm going to take another 15 shares off of them. I'm going to hold 10 shares as a swing since I'm already green in it enough, and I'll just let the rest run. But again, this was the dip I was buying, guys. If somebody said they were mad, I called it a dip. Here's the dip I was buying right here. You know, we're just buying the pullback after a big run, which usually, like the technical logic behind this trade is simple. Nobody wants to buy it. A lot of new traders get stuck buying at high of the days, but that's the most weak time because that's where a lot of experienced traders cut the trade and take profit. I try to buy on pullbacks instead, because, you know, that's where experienced traders usually buy. Now, pullbacks is the term pullback is relative, of course. If we zoom out here, you know, we look a little extended, but short term, if we zoom in, you know, pullbacks in terms of short term day trades are fine, I think. So we'll see whether we get it. Ultimately depends on what the market does also. Yes. So the meeting is at 21st to 20 to 21st. All right, guys. Hey, so Bowman is speaking right now. I'm just not watching it again. I don't think people are going to react heavily to it, to be honest. If we look at the actual stream on YouTube, they had like 200 people there. And so if you guys want that link, I can show it. But again, I don't think it's going to be super relevant to the overall market. Well, let me find it for you. Hold on. Here it is. Here, it's going on right now. It's got 59 people watching it. 59 people. So, I mean, I just don't know how much the market's going to react to it. But there's the link right now. Time to buy ETH. I don't know, man. I think leading into the merge, we'll see. You know, I think there's too many question marks regarding the merge for me to be super confident in a short-term buy for ETH. But, you know, what do I know, to be honest? All right, guys. Also, y'all check out TopStep. TopStep funds traders and futures. And so they give you a demo. If you can hit their target on the demo while following their rules, they'll fund you between 50 up to over 100K. Futures market's a great way to get around the PDT rule because, for instance, if you look at the SPY and then you look at the E-mini and futures, you can essentially trade the futures market with no PDT rule. Now, I will say it's incredibly difficult to get funded, but they give you a demo account, and if you can hit their price target while following their rules, they'll fund you between 50 up to over 100K with a 90% split. Regulated, located in the U.S., they pay out millions every year. They fund thousands of traders a year. Now, I'm certainly biased in their favor because I get a commission if you sign up through me, and so I'm certainly biased in their favor, but you know, there's no PDT rule in futures. You can day trade short a lot of these economic releases as you see me do. And again, one of the easiest ways to get around the PDT rule. Now, again, it is a demo account. You got to hit their targets and follow their rules before they'll fund you. But if you want to check it out, there's the link. Great way to help support our completely free trading content here. And I appreciate the love and support. I'm probably going to close it down, guys. I don't see too much going on right now. You know, we still got about 500 people here. And listen, thank you guys so much from the bottom of my heart. I truly do appreciate the love and support. We hit 83,000 subscribers already, guys. So we hit 83. We're almost to 83.1 subscribers. So, hey, if you haven't already, hit the sub button, hit the notification bell. I truly appreciate all my love and support to you guys. And, you know, thank you guys so much. Let me know where you guys think crypto is going to go. Also, do me a favor. Go subscribe to Beginner Crypto. Here is one of our crypto channel. I run it with a guy named Cam, super knowledgeable and smart guy. And we're trying to push towards 1,000 subscribers there. We've got about 780 subs on our crypto channel. Again, another completely free channel. And so here is the link for that. I truly do appreciate it if you guys go over there and subscribe. And we do weekly live streams. We do usually at least 1 to 2 live streams a week talking about the biggest crypto news. Cam is on top of this stuff too, to be completely honest. And so y'all check it out. There's the link. Good luck, guys. Give me a follow on Twitter if you can. And yeah, with that said, good luck. We'll see you guys next time. Have a good day. Good luck. We'll see you guys later.